Alright, yes guys, welcome to the trade recap of the trade that we took today on the 18th of August. What a way to start the week. Now, starting on the 15-minute time frame, as usual, we always mark out the key levels. Asia, London, previous day high, previous day low, new day opening gaps, new week opening gaps, day highs, day to lows, etc. Now, as you can see on the 15-minute time frame, we do have a very obvious high. Now, between 8 p.m. and 2 a.m., this is going to be the Asia high, so we can mark this out as Asia highs. And then taking a look back, we're currently trading on Monday, and you can see we have a very obvious low. Now this is going to be Friday's low, so technically it's not previous day low, so I like to mark when it's from Monday to Friday, previous session low. And then if we zoom out a little bit, let's mark previous session high, which I already have previously marked out. So this is going to be the London highs from Friday, which never got taken out, and it's actually previous session high. So we have previous session high, previous session low. What do you notice about this low and this low? It's in close proximity, so that means it's going to make this equal previous session low. Okay, so we have a set of equal lows, which is equal previous session low, and Asia highs. Now, for London, you can see the first 15-minute high inside of London is not this high. The first 15-minute high is going to be this one at 3 a.m. So we can mark out this high to be London highs. And straight at the New York Open, we went straight for London highs. So in other words, that's going to be a Judas swing if price returns back to the New York Open. So manipulation at the New York Open is what occurred today. So that was a major sign that potentially we're going to see a form of bearish price action. Whatever you mark out on NQ, make sure you mark this out on ES as well. So just copy and paste it over. So Asia highs, previous session high. Okay, so that's marked out. And then we can paste over London and also previous session low. What you'll see here is Friday's previous session low. There is a bullish SMT on NQ as ES already took previous session low, so that's one thing to note and be aware of between the two assets, and ES has also taken London highs. Okay, so now we've marked out the key levels. The next step is obviously determining our overall bias. So taking a look at the daily time frame from today, it's very important that you zoom in because this daily bullish gap got inversed on NQ. Therefore, the draw on the daily is bearish towards the next daily swing low or bullish gap. You can see here on the daily the next bullish gap is this one. So NQ is bearish on the daily until this bullish gap. So we can write down that the daily is bearish. Now let's take a look at the 4 hour. Okay, so by looking at the 4 hour time frame, you can see we was in a 4 hour bullish gap. This already got inversed. Now upon the inverse, you would be bearish towards the next 4 hour low. So the difference between previous session low, as we already know, is an SMT. ES already took the low, there's an SMT. Therefore, NQ's already met the draw of the inverse of the 4 hour bullish gap. So the 4 hour is going to be neutral. Okay, so by looking at the hourly time frame, TradingView is not really the best tool for backtesting. TradeZeller is. And what you'll see here is the hourly, which is presented as a now. This is the end of hourly candle close, which is a little bit annoying, but you can see if we jump onto the 1 minute quickly, this is where we're currently at. And the hourly close is showing us that the hourly is already at around 747. If we jump back to the hourly. So price on the hourly is up here and has taken London highs, as we already know, trading into the hourly bearish gap. So the hourly is bearish. The end of hourly close is neutral because we've already taken the low. But price, as of now, on the 1 minute of what we're monitoring, has not actually taken the low. This is the end of trade result from the hourly candle. So the hourly is bearish because we're trading out of an hourly bearish gap. And then looking on the 15 minute, you can see the 15 minute is going to be bearish because we're respecting and still inside of this 15 minute bearish value gap. So the 15 minute is bearish and we're also inside of this one towards the next 15 minute low or bullish gap. So the low is going to come first, which will be this one. So the 15 is bearish. So considering we already have 3 results out of 5, daily, 4 hour, hourly, 15 and 5 minute, 3 out of 5 is always going to lean towards a bias, which now is going to be bearish. So we have a bearish bias. The other point of what we look for is obviously a sweeper liquidity. So with a bearish bias, we want to see a sweeper buy side, which in this case, we can see we've swept London highs. Opposing draw is equal previous session low and also the New York Open price, which you can see here. So the New York Open low. Okay, so moving forward, we've had a sweep of buy-side liquidity following a bearish bias. Now we're going to wait towards the first day of macro and we're anticipating a shift in market structure. Okay, as you can see here, prior to the first day of macro, price almost took out the short-term high but didn't, creates a bullish order block and then inverses it. So this is going to be a mitigation block because we did not take out the high. So as of now, we have a shift in market structure below the previous short-term low, a fair value gap on both NQ and ES, which you can see here, a mitigation block paired with the fair value gap on both NQ and ES. So following that, we have ticked all of the boxes for the model and a clean draw lower. We're going to look for an entry off this fair value gap, and I know a lot of you are asking one question, which I'm going to go over in a second. Stop placement is going to be at the high because we can't run it at the breakaway gap body high because that would be too tight of a stop placement and very unrealistic. So the only place to run a stop would be at this previous short-term high, and then just aiming for the first 1 minute low that gives us a 2-to-1. So I was looking for this 1 minute low here, which is giving me a 2-to-1 risk to reward. I'm not looking to target equal previous session low. I understand it's the overall draw, but I'm not trying to overextend myself. I'm looking for a 2-to-1 for the first 1 minute low in this trade. Okay, so let's fast forward price. Okay, so upon the entry, you can see ES has inversed the 1 minute bearish fair value gap, disrespected the mitigation block, and has now acted as an extra confluence for price, creating a bearish SMT from this high to where we're currently at in price. Bearish SMT, and now if we play price onto the 15-minute time frame, you're going to see on ES that we traded above the short-term high, adding a bearish SMT, NQ still respecting bearish PD rays and the overall model itself, so everything is in and still valid. ES, on the other hand, took out the high, tapping into unfilled bearish 15-minute imbalances that NQ never traded into. So that's another form of a bearish SMT between imbalances. ES trades into the unfilled 15 and also the unfilled 15-minute bearish gap above, and taking out the high for a bearish SMT at the high as well. And then I caught my entry for price off NQ as we tapped this fair value gap here, so I was short. Of course, stop placement at the short-term high, and then my TP was just above the low at 754.50 of the point that I'm looking to target. So upon the fill and the entry, let's fast forward price. So you can see initially we go into a little bit of drawdown, and then once we take this short-term low, we're going to move our stops to break even. So the reason why we go break even at this low and not to the short-term high is because from TP using the fib tool to break even, if you take a short-term low past 50% of the trade, you're going to move your stops to break even. And if you create a bearish gap in a bearish trade past 50%, you assume that gets respected, stops you at break even. Vice versa if you was to take longs. Let's fast forward price. Okay, boom, this candle takes out that short-term low. That would be where your stops would go to break even, and then the next candle absolutely obliterates TP. Now I'm going to agree the price action today after this trade went sideways, and it was a period of accumulation, relatively slow New York session for Monday as expected with no red folder news. Now if you guys caught this trade, well done, this was the right trade to take today, and hopefully this breakdown does make more sense on why I took the trade today. And if you do enjoy these type of breakdowns, make sure to drop a like on this video to share it out to people that need it the most, and subscribe to the channel if it is the first time you hear my voice. Now for future videos on this channel, of course, let me know how much you made today in the comments of this YouTube video, and also provide some recommendations for future videos on this channel. And until tomorrow, have a great rest of your day, and we'll speak shortly.